Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6 a.m. Wednesday, July 20th. As always, please run your player at 1.5x. This morning I'm going to do something a little bit different. I'm going to skip the futures and the earnings, and we don't really have a lot of macro going on today. We've got oil inventories at 10:30. We got some mortgage application information, stuff like that. Not too terribly important. Got a lot of charts to go through, and so you can go to the website, look at the earnings calendar, look at the economic calendar, and pick up that information. What I want to start this morning, I came across this tweet last night. What an exhausting day for no reason. Dumbest rally I've seen in some time. That struck me as something that we could build off of as far as teaching, understanding the markets. And I'm not including his name here to disparage him in any way, shape, or form. I have been exactly where this guy is 100 times, maybe 1,000 times. So I know where he's coming from. But for you, let's read between the lines. This to me tells me that he was fighting the trend all day. He probably had in his mind to be bearish, and when things did not break bearishly, we had the big gap open and started running yesterday. He started looking for reasons. You know, why should we be having this rip roaring rally? And when you're on the wrong side of the trade and you're looking for reasons either to be, to hold your position or a reason for what's going on in the markets, I can tell you flat out, that's a losing recipe. That's a losing trade. If you're lucky enough to find a reason, you've already missed the trade. 99% of the time, you'll never find the reason. You'll hear financial media tell you try to connect something that happened during the day to the price action, but price action always comes first. If the price action is green, financial media will be saying, oh, well, earnings came in better than expected and sentiment was so bad it had to go up. Everybody had already sold, blah, blah, blah. And if it went down, well, Jay Powell's going to be tightening next week, 75 basis points. And, soft landings are going to be almost impossible. Put on your crash helmets. So very difficult to make progress as a trader. And I keep, looking for reasons. It's like a seat belt in an airplane. You're asked to buckle up because it makes you feel secure. But if you hit the ground at 400 miles an hour, it's really not going to matter. Trying to ascribe a reason for price action makes us feel good. It makes us feel smart. It makes us feel like we're getting an edge. But it's just something that makes us feel comfortable. And so I think the more you move along, I hope you find that out for yourself. I hope you trust me and just not even look for those reasons. I keep going back to that mental image, a leaf on a stream. If you are a leaf on a stream, you don't care if it goes higher or lower. You just want to be there for the ride. And so if you did that yesterday and you saw level by level being recaptured from below, light bulbs should go off in your mind saying, hey, this looks like a rally. So anyways, keep those mental images in mind, and I think it'll really help you in your trading. And just in your effort to learn, I would focus nearly 100% of your attention on price action. What are the technical elements that I want to be able to recognize in a chart? Which ones are important? Which ones are buy signals? Which ones are sell signals? And that way you can, when you look at a chart, you'll be able to quickly size up what would have to happen for you to be interested in the stock, either to short it or go long. What are the critical levels, etc. So let's take Bitcoin. Been on a real run here lately. We came in, we found support here at 19,000. We've chopped up to 22,000 a couple times, came down. We had bullish divergence on the indicators, and now here we are. What are the important elements? Number one, I've got a downtrend line connecting the tops of all the peaks right here at 24,000. I have a level here at 24,000 where it broke down. I have the 50-day moving average right here with price, right? So, and also in my volume over price profile, I see a big void in the chart where there was hardly any trading when this thing dropped, dropped from 28,000 to 4,000 or to 24,000 in 24 hours in a day. So here we are back at 24,000. What would I be thinking to myself? If it can take out 24,000, get above the 50-day, and break out of the downtrend line, there's not a lot of resistance stopping this thing at a minimum of making a flash move to 28,000. Take out the downtrend line, take out the 50, take out the trading range, make the $4,000 move. Now, if that's something you want to trade, there's a trade idea for you right there, but it's also, breaking down a chart, finding the important elements, the key spots, and, taking it from there. And when you're in the chart, you take the position, you're probably not going to look for a reason when it rockets up to 28,000, right? We don't tend to do that. We just said, oh, it's a bull run, and I was long, so great. I'm a smart trader. But if you wake up one morning and it's down $4,000, the natural tendency is to what happened? Go scrambling on the internet to see what happened. It might be interesting to know what happened, but it's not going to change the fact that price got rejected at 24,000 and came back down. I mean, that's trading. So focus on that price action. Okay. Hope that helped. That was the intent. Let's revisit our oscillators. NIMO 49, reaching towards 60, overbought conditions. NASDAQ, or NAMO, right here at 40, working its way higher. Nothing really concerning there till we get up into the 60 range. Then we're going to have to reassess and see what we want to do. Oil, downtrend, couple of rallies, back up to trend where it got rejected. That's TA 101. Once you're in a downtrend, you've got to break that downtrend to advance the rally. So here we are right here at basically 101. If we take that level out, then we can move higher to attack the 20, the 50, and a key resistance level up at 107.5. Now, you know that we're in XLE, and XLE will probably follow oil. So if you're long XLE, you're probably hoping for a breakout here. But I will tell you that a lot of the oil stocks are priced as if oil is like $70 or $80, not 90 or 100. So we may in fact see, if the rally continues, that oil stocks catch a bid, even though oil price is relatively stable. But at any rate, we're at a key spot right here. A break above 101 will open the door for higher ground. Moving on to SPY. Nice move yesterday, 2.7%. What were the technical events? We had been rejected along this line of 390 for quite a number of times. We had resistance, 3 days of resistance here, got rejected. It was support back here. So breaking above 390 is an important event. Next, broke above the downtrend line. So now we're above it. We've broken out. What obstacles lie in front of us? We got the 50 right overhead at 393.18. Be aware of that this morning. That's why I've put this pivot point here in the middle, just to say the 50 is often a great level to be long against on that breakout. And then we want to get above 393.18, get above the 50, and then see if we can make some progress filling this gap that goes up towards 399. Notice on the RSI, we've broken above 50, and PPO after the bull cross has steadily advanced. We're still not in the bull regime, but we've got separation here on PPO between the reference line and the signal line. And so what we're hoping, of course, is RSI moves higher and PPO can break into the bullish regime and get those on solid ground. And of course, the indicators will follow price. So we got to take out the 50, fill this gap, see if we can make a run up to 405, and then this huge resistance area between 410 and 415. 60-minute chart. Gap up yesterday. Here was a level at 386 where you could have bought. Another level was here. On lower time frames, it was like 399. Whether you got it at 390 or 399 or 389, I'm sorry. Whatever you had on your charts, but on the daily chart, more or less 390. We've pushed above these areas of rejection. So on any pullback today, I want to see it hold 390. Could it come down here to 386 and have everything be okay, sure, because you've got a high volume bar here that will act as support in this area. But if the trend remains strong, I would think all this support here along this line of 390 should hold, and that's what I want to see. So today, be aware of where the 50 comes in, and be aware of this big $5 gap that lies above. You certainly want to be long on that gap entry. The Qs continue to make good progress. The most significant thing that happened yesterday is a break above the 50 right here that comes in at 297. So that would be an area to hold on any kind of pullback, but certainly 296 would be a level as well. And one thing about the 50, remember, we're not the only guys that have charts. There's a lot of, quantitative algo type automated trading that key off of these moving averages. So when they see a recapture, that's just as much a trigger for them as it is for us. So there were a lot of individual stocks and sectors either challenging their 50-day moving averages or exceeding them. So what I'm hoping for is more or less some panic buying. Because remember, all the professional money is way down this year. I mean, they've been destroyed. And if you looked at the sentiment and positioning charts that I put up yesterday on the blog site, you'll see that long positioning is as low as it was at the depths of COVID. So if you're behind the 8-ball and you don't have any long exposure and you see this rally start to emerge, I mean, you've got to do a lot of catch up for the end of the year, or it's not going to look too good. So we may get some panic buying by the institutions. So, I mean, maybe that's my fantasy for today, but I'm going to stick with it. 1 hour on the Qs. Gap up. Took out this big line of resistance here at 296. To me, that was really, really important. Actually filled this gap up to 298. I'd expect a little resistance here at 300. We've got a high volume over price bar, but then just above it, we've got a void in the charts that could make the path from 300 to 305 somewhat easier than all of this congestion down here. So this series of higher lows coupled with this line of resistance formed that ascending bullish triangle, and we've broken out of that. So today, on any kind of pullback, I really want to see 396 hold. Why? Because all of this should be support, and your high volume over price bars start emerging at 296. So I really want to see that hold. Moving on to small caps. Actually a great day yesterday, up 3.5%. We had a recapture of 174, and then we had a recapture of both this line at 178, where the value profile falls away. Resistance, 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 breakout. So we're above the 50. We're above technical resistance. All we got to do is break this minor downtrend line, and that will open up a path towards this gap above. And you can see it really well right here. Here was that line of resistance right along this 176, 178 area. We're above that now. Not a whole lot stopping this from going to 181. On any kind of pullback, I want to see 176.50 hold. Come back here and then re-accelerate. I would be, I'll just say disappointed. I won't say concerned, because really anything above this trend line keeps it bullish. But I wouldn't want to see what would look like, a fake breakout at the end of the day if this were to just come back and fail. If there is a pullback, I think 176.50 will ultimately hold, and that would be an objective place to try along. You know what? Meta finally did it. Rejection at the gap, rejection at the gap, rejection at the gap, rejection at the gap. Finally got the breakout. Gapped up to this 170 level, which was an important level on the chart from the volume profile. Then we got this gap entry at 172 and never really looked back, just went up the whole way. Now today, we've got a little volume over price bar here at about 176. And take note that on the daily chart, the 50 EMA comes in at 178.44. So if you're long on Meta, against the top of this gap, and you get a little run up into 178.50, and there's a hesitation, don't start pulling your hair out. Just be aware that you're at the 50, and that may pose a bit of resistance. Now, you might be one to say, you know what, with the 50 right there, I'm going to wait till price proves it, and if price breaks out above the 50, then I'm going to get long. Either one of those is fine. It kind of depends on your time frame and what you're trying to accomplish. I think, today is kind of the last day. I don't like to do, Thursday for Friday or Friday for Friday. I'm willing to do Wednesday for Friday, 2 days before expiration. But if it goes up here and stalls, then you're going to be sitting there with time decay starting to dig in. Now, if I was a guy that was going to wait and then I got this breakout, I would go next Friday, not the 22nd, the 29th, because once you cross the 50, there should be some good upward momentum on your trade, on price. Apple, nice day yesterday. Started out a little slow. There were a couple chances to buy 137 yesterday before it really took off. And now we're back up at resistance at 150, 150. And here again, I want to point out that the 200 is just above at 152. So given, we're 50 cents, maybe $1 away on Apple, if you got a breakout above the 200, that's a real green light, because recapturing the 200 puts it technically, in bull mode, even more importantly than the 50. So I wouldn't be surprised if once this recaptures 200, you should get a lot of technical buyers there. So be aware of that today. Now, we got Tesla after the bell. Was a little soggy yesterday. 2%, underperformed the market a little bit. But there was that trial with Twitter going on, in the early afternoon. Blah, blah, blah. Might have been an overhang situation. Today, I think you can be long against 735 and then look for a move to 745 and then into this old gap that has yet to be filled up to 775. Got a nice trend line off of the lows to use as a benchmark. If there's a pullback into 720, I would buy it just like we discussed yesterday. Moving on to Microsoft. This one was a little soggy as well. It was 2%. Started off rough, worked its way up, broke this triangle downtrend line, and now is challenging 260. I think 260 is your pivot today. I think you can be long above, looking for 264. Notice in the profile, there's a gap, a void. So I think the price move from 260 to 264, if the market stays constructive, could be a lot faster than, all this congestion down here. Amazon, nice move yesterday as well. We had talked about 117 being resistance. We had talked about 115 as being an important pivot. There was a chance to buy this on the recapture of 115. At that point, you were trading for 117 back up at resistance, and we got that breakout. So from here, on any pullback, I would expect 117 to hold. Why? Because it was resistance all back here, and now all of this becomes support. So if you get a pullback into 117, I'd be a buyer there. First target 120, right on up the line. And if we go to the daily chart, you'll see that we recovered the 50, recovered this line of resistance at 117, and there's really not a whole lot stopping this from going to 126 on this move. And then you'd have kind of the W formation, right, back up to the top at 126. So I like that long against 117. Here on Google, we had the reach down to support, a little bit of a gap up, reclaim of 110, reclaim of 111, reclaim of 112, reclaim of 113. So those were, literally those were your buy points all the way up the ladder. Now here today, 114 is your clear pivot, and I think on any pullback into 113, 112.50, I think you can be a buyer there. Notice where the big volume over price bar is. If you got a pullback into 112, 112.50, that kind of thing, I'd be a buyer there. And remember, all these mega cap names are going to start reporting. It's either next week or the week after. So there is the potential there for a pre-earnings run. So these charts are looking a lot better. Netflix had a great day yesterday. It was up 5%. Showing you this daily chart instead of the 60-minute chart for a reason. We've carved out a $40 trading range as the base. Yesterday, price closed right on the 50, and you got the top of the trading range right here at 205. I think pre-market, I was looking, it was trading like 215, somewhere up in here. So just using our TA, a breakout that holds from a $40 wide trading range projects up to 245, and that isn't a coincidence. That happens to be the bottom of the gap from earnings. So be cognizant of the gap open, but if they start buying it, your target on the daily chart is going to be 245. And then who knows after that. Let's look at the other scenario. Gap open from last night's earnings. And let's say they decide to flash fill it, go down, go in for a back touch of the 50. All the more better if you're not in to be a buyer at somewhere between 205 at the top of the range and 202 at the 50. And see if they don't bounce it up after that. But that would be an objective buy down here at 205. Semis have been on a vicious run. Had a gap open, reclaimed this 218.50, made a move into this $4 gap, and all but filled it yesterday afternoon. So your pivot for today is going to be the top of the gap. I mean, just call it 224. Above 224, I see 228, then 230. But as we discussed before, be aware where, what the big picture is. Well-defined downtrend. We took out the 50. That's a plus. We took out this trading range. That's bullish. And now we've got the upper part of the downtrend line to contend with that comes in at 230. So that would be a decision point. But we're only trading 223 at the moment. So I think there's going to be a run to touch the top of this channel. And if you are long, at any point along here at 230, at a minimum, I would expect a price reaction, a bounce down. And then if it's going to break out, reassault and go back for another try, after not having touched it for so long. Anything's possible, but I think you're going to get a rejection right here or a little fake breakout to fill that gap, then come right back down. So I would be taking some profits there. And also, if you're trading AMD and Nvidia and all those higher beta names, keep an eye on SMH because they're gonna, follow each other. If SMH is coming in to 230, even though you may see on your AMD chart that you got a ways to go. If this thing rejects, they're going to sell down AMD and NVIDIA, and all the other names as well. I mean, they're all components, all those are components, but when you got the ETF coming into resistance, that's a time to be cautious if you're trading individual names, and that'll hold true for our Micron trade as well. ARCF, nice day yesterday. Reclaim, gap fill, breakout. 1750 is your pivot. I want to show you the daily chart. Coming up here on 1850, that's going to be an important level. If you're like a daily type swing trader, I would definitely have this level highlighted and alarmed, because if you recapture the 50 and you get this break above these high volume bars at 118.50-ish, I see a fast move up to 23 where it may encounter some problems. But if there's a big rally, could come up even to the 200 at 28. So I would definitely have that level alarmed. Same thing here on ARC Genomics. This is the daily chart. Fast move. Recaptured all the moving averages except for the 200. That's bullish. Bull flag action. I would have 38 alarmed here on genomics. Why? You get a break above that, you're into a void. I see 38 to 43 pretty quickly on a recapture of 38. I think that would be a nice trade. Nice ascending triangle on ARC. Came down to touch support, moved up above 45.50. I think that's your pivot for today. Got a little gap, and then 47 would be a target, and then you got the prior high at 48. I want to show you the daily chart here. This 47.5 is going to be a big level. Breakout there, 52, then 57. Notice the measured move target from this trading range. 25% would bring you up to 57.50. ARCW, wobbly in the morning, then it took off. Took out this 54.25. I think that's your pivot for today. Got a gap above, and then a target up here at 57 across this line of resistance. Let's look at a daily chart. More work to do here. We got the 50 above, and then the top of the trading range coming in at about 59. So if you're like a swing trader and you don't want to get involved in all this choppy action, set yourself an alarm at 58.50, 59, right in that area. If that breaks out, I think you can pencil in 68 right here at the prior low and the next high volume bar. Let's quickly go through our trades. Micron, slow start to yesterday, but ended up having a good day. Moved through this gap area. Now, if we can hold 62, we got some room to run. I like that. We got the 50 right overhead at 63.18. We can break that. I think we'll go to 66 pretty quickly. Lows did well. We took out the 50 yesterday. I think there's room to run potentially up here to the 200. You can see that the volume over price resistance, enlarges as we go higher, but that's fine. I think we got some room to run and, possibly come right in here to 195, 197 before it starts encountering major trouble. Goldman was the dart throw yesterday that paid big. Sent you out a heads up early in the morning. To be honest with you, I had no idea that it was going to go into launch mode. I just saw that the setup was bullish, and that is a lot of what trading is. What told me it was constructive was the double bottom low with bull divergence, taking out technical resistance at 300, recapturing the 50, and breaking out from the downtrend line. So whether you got that fast, like at 305, or you bought it at 312.50, doesn't matter. It's a good trade either way. Now, going forward, you noticed we recaptured this trading range. That's going to be positive. I think we at least go to 325, which is the top of this prior trading range. And if we can take out the 200, we can certainly go to 340. Lastly, SBUX, just like the other charts, we took out this high volume bar. Now we're in an area of relatively lower volume over price resistance, and we got the 200 coming in at 88. So if we can make that, I think we'd all be real happy. So long video. Hope you found it helpful. If you're new to the channel, more of this coming your way. Hit the subscribe button, the alarm bell, jump over in the show notes, drop in, there's a link to the blog site where you can drop in your email, and you'll get all this content morning, noon, and night right to your email box. Love to have you. Hope you guys found the video helpful. Remember, price is all that pays. Follow price, know your levels. When you get a signal, take it. If it doesn't work out, respect your stops. You won't get hurt that way. So let's see what today brings. This has been Chris Buss with Traders Profit Compass. Talk to you next time.